Greetings, everyone. In today's video, we'll be discussing the process of acquiring a lucrative business in the year 2023. Are you ready to make your mark as a business owner? Purchasing an existing, profitable business is a strategic and rewarding way to embark on your entrepreneurial journey. Almost always, buying an existing business is more efficient, less risky, and less costly than starting a new business from scratch. With over 3 decades of experience, BizBen is instrumental in helping aspiring business owners achieve their dreams. This video will provide essential steps for successfully buying a profitable business. Additionally, we will demonstrate how BizBen.com can serve as your ultimate resource throughout this exciting process. Define your goals and criteria, building your foundation. Before you commence your search, it's essential to lay the groundwork by clearly defining your objectives and criteria. First one is business type. Determine the type of business that aligns with your skills, passions, and interests. Next step is financial capacity. Assess your financial capacity, including the budget and working capital you can allocate to the purchase and the post-closing business operations. Next step is location. Decide on the geographical location that suits your preferences. And lastly, role. Consider whether you want to play a hands-on or passive role in the business. Having well-defined goals will streamline your search and ensure that you make a choice that resonates with your vision. Research and market analysis, navigating the business landscape. Understanding market dynamics and industry trends is crucial for making informed decisions. First step is succeed in booming sectors. Delve into industries that are experiencing robust growth or undergoing transformations to align with emerging trends. Next step is assess the market. What is the likelihood of sustained market demand in the years ahead? Is it growing, declining, or remaining steady? What other services, products, or technologies could supplant what is offered by existing businesses? Next step is match your interests. Look for trends and opportunities that align with your interests. Last step is know your competition. Analyze the competitive landscape and evaluate the demand for businesses in your chosen niche. Effective market research equips you with the knowledge needed to identify lucrative business opportunities. Financial preparation, your financial foundation. A solid financial foundation is essential when buying a business. Secure your financing before commencing your search. First step is financial resources. Determine your budget, encompassing the purchase price and working capital required for maintaining cash flow during the transition and for subsequent business growth. Next step is financing options. Explore various financing options, including personal savings, SBA loans, home equity loans, investors, and/or seller financing. Having your financial resources pre-approved and in place demonstrates your seriousness to sellers and positions you as a strong buyer. Seek professional guidance, tapping into expertise. Leveraging the expertise of professionals can significantly enhance your buying experience. Firstly, network and expert advice. Tap into your professional network and seek advice from industry experts. Lastly, professional assistance. Collaborate with experienced professionals such as business brokers, due diligence experts, business lenders, attorneys, and accountants. Their insights and guidance are invaluable in navigating complex legal, tax, and financial matters and ensuring a smooth transaction. Find potential businesses, exploring your options. Finding potential businesses is the next crucial step. Explore diverse sources. Utilize a variety of sources, including BizBen.com, which offers an extensive range of listings. Think outside the box. Consider businesses in fields similar to or synergistic with your target industry. Search broadly, take off the blinders. Evaluate businesses with the financial, technical, market, and human resource information and other data disclosed to you in the seller's confidential information memorandum. Determine what the business is worth to you. Advice from an accountant and other financial professionals can be helpful, but, fundamentally, you need to determine that the business can service the financing, whether your own funds or a loan, provide you compensation for your time, return a profit on top of that time-based compensation, and provide a sound platform for future sustainability and, if important to you, growth. Ultimately, though, the final decision must be based not on what the business is worth to an accountant, a banker, a broker, or an appraiser, rather it must be based on what the business is worth to you. Determine what similar businesses have actually sold for, not what sellers are asking for similar businesses, with the most emphasis on the multiple of sellers' discretionary earnings, SDE, or cash flow, and on the percentage of gross revenue. Negotiate the deal, make the offer. Effective negotiation is an art that involves understanding the seller's motivations while being clear about your terms. Firstly, price and terms. Negotiate with the seller to reach a fair price and deal structure that aligns with your goals. Lastly, contingencies. Be prepared to include in your offer contingencies like a successful due diligence inspection, landlord agreement to lease transfer, bank financing being obtained, and/or satisfactory financial review. Finalize legal and financial aspects, navigating the details. Work closely with your attorney and accountant to finalize all legal and financial aspects of the purchase. Draft contracts. Collaborate with legal experts to draft contracts that protect your interests. Lastly, secure financing. Work on securing financing, licenses and permits. Ensure all necessary licenses and permits are obtained and comply with regulations. Conduct a thorough due diligence inspection, ensuring transparency. Before finalizing the deal, a detailed inspection of the business is essential to ensure transparency and avoid hidden surprises. Once you've identified a potential business and entered into a continent, asset purchase agreement, APA, performing comprehensive due diligence is paramount. Firstly, request detailed records. Request comprehensive financial records, and meticulously analyze the business's financial performance. Include tax returns, accounting software, bank accounts, personnel records. Secondly, assess strengths and weaknesses. Evaluate the strengths and weaknesses of the business, including asset conditions, lease agreements, employee expertise and loyalty, and customer and supplier contracts. Next, professional assistance. Engage professionals like accountants and attorneys to assist with due diligence. Lastly, seek assistance from the seller's business broker. In particular, request an extensive and comprehensive seller disclosure statement covering every conceivable legal, regulatory, and liability item, including workplace safety, insurance claims, fines and violations, human resource disputes, governmental investigations, lawsuits, active, contingent, pending, and possible. Have this info fully reviewed by your own lawyer. Transition and operations, seamless ownership. Plan for a seamless transition. Firstly, understanding operations. Familiarize yourself with the business's operations. Next, crawl before you walk. While there are exceptions, in most cases don't change anything for at least 6 months, learn the business before you reinvent it. Lastly, employee engagement. Meet with key employees and create a strategy for the initial months of ownership. Do whatever is reasonably necessary to retain these valuable business assets. Maintaining continuity can be vital to the business's success. Learn and adapt for post-acquisition growth, a continuous journey. Business ownership is a continuous learning experience. Adaptability. Stay adaptable and open to new ideas. Focus on growth. Once the business is acquired, focus on growth and improvement. In summary, buying a profitable business can be rewarding, but it demands meticulous planning and diligence. By clearly defining your goals, conducting comprehensive research, seeking professional guidance, and following a systematic approach, you can increase your chances of acquiring a successful, sustainable business. Remember that every business acquisition is unique, so adapt your approach accordingly. With the right strategy and mindset, you can turn your entrepreneurial dreams into reality. Thanks for watching.